This video is designed to help Year 12 accounting students know and understand how to record period costs in the inventory card, in the general journal, and in the general ledger. First of all, what are period costs? So by now you've probably looked at product costs. So you can see that the definitions are very similar. In fact, there's only one word that changes, and it's this one here that I've circled. Can versus cannot. So a period cost is a cost that is incurred to bring inventory into condition or location ready for sale that cannot be allocated to individual units of inventory on a logical basis. So what that means is anything that to get into conditional location might include delivery to our business, might be modifications such as adding a logo, but we can't allocate these to individual units. So an example would be something like a delivery cost charged by our supplier, and that might be for the total invoice, and we might have gotten 4 or 5 different kinds of items delivered in that one container. So we can't logically allocate the price of delivery evenly across those items. That might be because in there I might have items that are really small or really large. An example might be if I'm a computer store and I buy computers and maybe keyboards, it wouldn't cost the same to deliver a computer as what it would to deliver a keyboard based on things like their weight and their size. So let's have a look at an example. This example has been taken from the Cambridge VCE Unit 3 and 4 text, and it is similar to the one that we used for product cost, where we have purchased some items from McAvoy Golf Gear. So you can see that we've purchased some golf clothing, we've purchased some golf shirts and some golf hats. And we did this on credit because it's invoice 67. So you can see that we purchased 20 shirts at $23 each and 10 hats at $8. That total came to $540 of items that we've purchased. We then had cartage in, so cartage is another word for delivery or freight, of $50 for that invoice 67. So that $50 covered the shipping or the cartage of the golf shirts and the golf hats. So you can see here that our delivery or our cartage couldn't be logically allocated. And that's because this cartage has to cover both shirts and hats. And you can see that these items would be very different in size, in weight, in shape. It might be harder to ship one thing over the other. So we can't simply divide it by the number of items, 30, and allocate that. Therefore, we have to treat this as a period cost. So what that looks like is in our inventory cards, we've got 2 inventory cards here, one for the shirts and one for the hats. You can see that the cost prices that we've used have had no change from the item cost prices up in the scenario. So we've got $23 for the shirts, $8 for the hats. But where it changes is over in our general journal and our general ledger. And that's because a period cost is not recognised within inventory cards. It's recognised as its own separate account in the ledger. So you can see that the inventory account, so our asset, has increased by $540. That represents the shirts and the hats together. You can see that we now have cartage in, which is an expense of $50. Now in product costs, we wouldn't see that. We would see that being absorbed almost as part of the inventory, but now it's been separated. And then we've got our liability going down for GST clearing and our liability going up for our account payable to Nick Well Clothing, who we are now going to owe this $649 to. So what does that mean in the general ledger? Well, the cartage in, when it is a period cost, is going to have its own ledger account. It's not going to be part of the inventory account. And what that's going to mean over in our account payable, if you have a look at the transaction down the very bottom, is we actually now have quite a complex cross-reference, because that amount of $649 that we now have to pay back to Nick Well Clothing comes from 3 different places. Part of it represents the amount that we've paid for inventory. Another part represents the amount that we've paid for the cartage or the delivery of that inventory. And another part represents the GST that we have paid on that inventory. So quite a complex cross-reference that we've got here that you can end up with from period costs. So most important thing to note is that period costs are not included in the inventory card. They have their own ledger account and they are recorded separately in the general journal, as you can see from this example.